Welcome to AI U.S. stock. We watch markets with calm focus and sharp instincts. It's Wednesday, March 25, 2026. Stocks finished higher, but don't confuse green with carefree. This felt like selective risk-on with a defensive backbone. Semiconductors brought the adrenaline, healthcare carried a lot of the leadership, and energy was the obvious red pocket on oil weakness. Big takeaway? Growth still worked, but only in the highest conviction names. On the S&P 500 Heatmap, you're looking at a mixed to green board, more winners than losers, but not that everyone's buying everything kind of day. Mega caps mostly helped. NVDA and Amazon were supportive, while Microsoft was a noticeable drag. Sector color really mattered. Healthcare was broadly green, industrials and materials leaned positive, and energy was the cleanest red island. And inside semis, it wasn't one smooth block, there was real divergence. Following that heat map, the money flow looked like a barbell. On one side, defensives, healthcare especially, plus durable industrial and defense-style bellwethers. On the other side, the highest signal AI and semiconductor names. Industrials and materials helped the tape feel sturdier. Flip side was clear too. Energy underperformed, and parts of big software felt like digestion, not leadership. This wasn't a blanket risk-on. It was a shopping list. Here's the tension that didn't go away today. You had NASDAQ leadership. Powered by chips at the same time, healthcare was leading hard. That combo usually reads like a market that wants upside, but still wants protection. And the semiconductor move wasn't clean beta either. Some names surged while others broke the pattern. Overall, it felt like rotation and positioning, not broad conviction. On the chatter front, we didn't have a verified list of market rumors in today's materials. What we can say is this. A couple of high beta, AI-linked names moved hard without a confirmed same-day headline in this sweep. That's where you separate story from proof. Sometimes it's positioning and momentum, not news. And with energy weak and oil sensitive to headlines, keep an eye on volatility cues tied to geopolitics, but treat unconfirmed narratives as exactly that, unconfirmed. Markets are breathing a big sigh of relief today, but is it premature? The Trump administration just dropped a 15-point off-ramp proposal delivered to Tehran through Pakistan. We're talking about a total dismantling of Iran's nuclear facilities at Natanz and Fordow in exchange for a complete lifting of sanctions. This isn't just a ceasefire, it's a reset. Pakistan's prime minister is clearing the schedule for a Friday summit, and energy markets are reacting fast. Brent crude tumbled to $90.32. Investors are betting the 5-day strike pause the White House announced as the beginning of the end for Operation Epic Fury. But with the Strait of Hormuz still a contested zone, the question is simple. Is Iran really ready to sign away its nuclear ambitions, or just buying time while the U.S. pauses the pressure? While Wall Street is cheering the 15-point plan, there's a big shadow over this off-ramp. Jerusalem is reportedly blindsided by the size of the U.S. concessions. Israeli officials are signaling that any deal leaving the current regime in power is a non-starter, and that could open a serious rift between the two closest allies. The proposal also demands the Strait of Hormuz becomes a permanent free maritime zone. But how do you enforce that without a permanent naval presence? That's where the portfolio risk comes in. If Friday's talks in Islamabad show even a hint of stalemate, that 6% dip we saw earlier this week can slide into a full-blown correction. We're watching the 5-day strike pause very closely. If a single drone is launched by a proxy group, this peace rally can evaporate in an instant. Keep your eyes on the VIX and the energy sector. This volatility isn't over. AMD was one of the clearest tells of the day, up just over 7%. That kind of move changes the feel of the NASDAQ session. Pure high beta AI compute momentum. When AMD gets paid like this, it's a sign traders are still willing to reach for upside in the chip complex, even while the rest of the market stays selective. Intel ripped too, up just over 7%, and that matters, because it speaks to breadth inside semiconductors. It wasn't just one star name dragging the group. INTC showing up as an upside outlier is a sentiment tell that traders were willing to broaden chip exposure, at least for this session. Micron told the opposite story, down about 3.5% on a strong semi-tape. When you see that kind of split, it's a reminder this wasn't clean sector beta. It looked like stock-specific selling pressure and rotation, and that can set up sharper single-name volatility even while the index looks calm. NVIDIA did what it usually needs to do on a day like this. Stay green, it added just under 2%. More steady bid than blow-off. And because it's such a central AI bellwether, that stability acts like a permission slip for the rest of the AI complex to keep working. Microsoft was a notable drag, down about 0.5%, even as semiconductors ripped. That's the internal tech divergence to keep in mind. Money leaned toward compute and hardware-style exposure today, while big platform software just wasn't the leadership engine. Exxon was a clean example of what didn't work, down a little over 1% as energy stood out as the clearest red pocket on the board. Session notes pointed to oil weakness, and the result was straightforward. Energy bled, even while the indices finished green. Looking to Thursday, the calendar we've got doesn't show high-impact US dollar data for March 26th, so near-term price action may stay about positioning and follow-through. Traders will be watching whether AMD and Intel can hold momentum, whether Micron stabilizes after diverging, and whether NVIDIA stays supportive. On the other side of the tape, energy is still a key watch. If crude stays soft, that weakness can linger, and in high beta, AI infrastructure, the next signal is simple: tight consolidation or volatility spill. Bottom line today. The indices finished green, but the market wasn't one big agreement. It was rotation, defense, and AI compute working together, while energy stayed the weak pocket. Heading into the next session, the question isn't just up or down. It's whether leadership broadens and whether today's winners actually follow through. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.